if you knew that your company, I'll finish with this and then we'll get back to charts here. If you knew your company was reporting in 3 weeks and you knew it's going to be a bad report, guidance is off, CapEx through the roof, we were expecting a rate cut, we're not going to get one. Orders for hardware are less than we thought. The data centers are closing. We're just not doing, across the board. If you thought that, would you not want the investor community before the report? Would you not want a pump? Get up as high as we can for our investors so that when it does dump, at least we'll be, around here instead of from here to here. So there's a lot of pumping going on prior to earnings. This is called, the rise into earnings, the push into earnings, the surge of the price leading into earnings. So leading into the earnings season, you're just going to see a lot of pumping. And all they needed was some kind of catalyst to get out of this mess here. They got it, and now they're just pumping it. But this has to come to a head at some point. And so we'll just keep trading what the market is giving us here. I mean, what you don't want to do is look at this and go, oh, wow, let's buy long calls. Well, you could do that until you get, what ends up happening, until you get that, until you get that, until you get that, until you get that, until you get that. See, every time that you pumped, look what happened. Every single time you pumped, it dumped. I mean, look at it. Pump, dump, pump, dump, pump, dump, pump, dump, pump, dump. I mean, really? This is where you want to go long? Yeah, but it's just going. I'm missing out on all this. Okay, go ahead. Buy long calls. Now, you also don't want to lean in short too much because there might be a little bit more left. So you start taking little nibbles and you start placing small bets of a potential reversal. If you want to have a hedge to the upside, which we do, you can have a little bit of that too. What you have to do, though, is if you do decide to short a little bit and the market gaps up again, then you got to roll your position and change the strikes. So let me show you what that means. So let's just say you're looking at a stock and you buy the 200 190 put debit spread. And you put that out 2 weeks. And price is at, say, 205. Right? But now you get the pump. And now it's at 207. And then it's at 211. But you're hitting a topping pattern. So it's topping. So you still think it's going to come down, but now you only have 1 week left and you're too far away. Everybody see this? I'm going to do what Cake does. Put a Y in the comments if you understand where I'm at. Put an N in the comments if you need me to repeat it. Nobody wants to admit that they don't understand. Okay, you guys understand. Good. Price is at 205. You think it's going down. You put the 200, 190 credit spread, and now price has gotten that. Very good. Farm Boy doesn't understand. Farm Boy, you're always a little bit behind. So, you just have to listen to the replay. I'm kidding. So now what do you do? Slow on the farm. So now what do you do that you're up here? Even if you got the drop, it's not enough. You're going to either not have enough room to get to your strikes, or you're going to run out of time before that happens. Does everybody understand that? You're either going to, or both. I'm going to run out of room. I'm not going to get there, or I'm not going to get there in time. But if you still believe, because of either the market internals or price action in some way, topping pattern, moving average, volume decrease, Friday, options expiration that might flip the markets, number of reasons why you still have the belief that it's going to go lower, then you have to take this and roll it out another week or two. So you have to roll it out, but you have to change your strikes. So you're going to have to bump up to 205, 195, if that's, if this is kind of where you were. You're going to have to move it up a 5 delta, right? Boom, boom. This is important to understand, which is what we did. We did it with NVIDIA, we did it with IWM, we did it with gold, but now it pumped up again. So it's possible we might have to roll again or cut it loose and reevaluate and put some new strikes on. That's just part of trading. It's not about being right. It's not about being right or wrong. It's about just you see what the charts do, you place your bet, you've got allocation, you've got strategy, hedge if you need, have flexibility, know how to manage the trade, roll it if it needs rolling, move the strikes if it needs it, take the loss if that's what it is, and then reevaluate and put it on again or put it on in the other way. What I don't want you to do is say I was wrong and now I'm switching to calls. Okay? Not if the narrative and the market internals still bear out your initial thesis. If the price action still shows, not the price action, but anything but price action. Obviously, price action is just moving higher and higher. But if you still have the narrative where you believe that it is going to drop, and you just need more time and move the strikes, then do so. Don't just all of a sudden switch to here. Because then when it starts to fall like you had thought, then what are you going to do? Close your calls and then buy puts? The problem with buying calls now after the pump that we've gotten is they're too expensive. You can't buy calls now, right? You're not going to get a fair value for them. That's not going to work for you. If you wait, if you did that though, not only are you going to pay too much, when it drops, you lose your money, and now you want to switch back to puts. Guess what the puts are? Now the puts are too expensive. It's not the time to buy puts after this. Everybody understand? So if you see market go like this, and you want to buy calls, this is not the time to buy it. Yes, you can sell some premium. Now, if you think that it's going to do this, then yeah, you can put a call credit spread up here and take in some premium and then use that money, go out a week to 2 and buy your puts with it. Puts or verts, put verts, flies, whatever you choose to do, right? Take the credit and put it into this. If you start to head up here, you might have to roll it. You might have to roll these. You have to be able to be flexible and manage. But yes, if you see these gap ups and you're like, there's a level here, I don't think it's going to reach there. If anything, I think it's doing this. Then get your credit spreads, sell some premium, and then go out a couple of weeks and put your puts here. This is the best strategy that I know in this particular market. Sell the premium and then buy puts. Don't buy calls here. If you thought that the market was going to go higher, then on this move, you can sell put premium here and use the money to buy calls for this move. So it's all about timing. So what you don't want to be is one of these. Oops. And I taught this in the very first week of Trade With Me Now. Right? You see this. I wonder if I still have the slide. I'm sure I have it somewhere. You're kind of neutral. You don't know what to do. Right? So you start to see this and you're like, oh, wow, look, market is going super high. I'm excited. I'm very enthusiastic. In fact, here I am ecstatic. And I'm going to buy because this is just, I don't want to miss out on this. And then here you say, oh. And now you get nervous, and now you feel bad, and then you panic, and then you vomit, and then you sell it, or you lose it. And now you're like just absolutely depressed. So this is, this isn't good. This is, oh no, this is like really bad. And then you absolutely, and this is what happens to retail investors all the time. Some of them say, F it, and they buy puts here to jump in here, only to have investors buy the dip, algo bounce, and boom, 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 boom. And now what are you feeling? More pain, more vomiting, and you get out here. And then it pulls back, and it goes higher, it goes higher, it goes higher. And you're like, well, I think maybe I want to get into this now. Maybe this time it'll be different. And this just happens for the rest of your trading career. And this is what most of you did before you came here. It's what I did. So don't do that, okay?
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.